Welcome back to the Live Your Best Life podcast, where we explore the people, experiences, and philosophies shaping success and meaning in today's world. Today, we're joined by Brent Coggins, Chief Investment Officer at Triad Wealth Partners. He spent his entire career navigating markets with discipline, perspective, and a long-term lens. He joins us to talk about what truly differentiates Triad and how he balances complex financial decisions with family life and time outdoors with those who matter most. Let's dive in, because smart investing is about more than numbers. Welcome back to the Live Your Best Life podcast, where we dive deep into the mindset, money, and meaning behind building a life of purpose. I'm your host, Tim Sullivan, and today we're joined by Brent Coggins, Chief Investment Officer over at Triad Wealth Partners. Brent leads the firm's holistic investment strategy, covering everything from asset allocation and portfolio construction to advanced investment research. With experience in both traditional markets and alternatives, like private equity and venture capital, Brent brings depth and clarity to an often complicated space. He holds a degree in economics from the University of Kansas and an MBA from the University of Missouri, Kansas City. But beyond the charts and benchmarks, Brent is a family man. He lives in Kansas City area with his wife and two daughters. And when he's not analyzing markets, you'll probably find him outside spending quality time with his girls and enjoying the outdoors. Now, Triad Wealth is an investment partner in TAMP. That stands for a turnkey asset management platform, providing portfolio management, research, and investment solutions for independent advisory firms like ours over here at SWAG. While Triad collaborates closely with us to support our clients' investment strategies, they operate as an independent registered investment advisor. Brent is here today to share insights on the markets and broader investment trends. Please note, though, that nothing discussed today should be considered individualized investment advice. Our conversation is for informational and educational purposes only. If you guys have questions about anything we talk about today, please give us a call here and we'll be glad to talk to you more on a personal level about and answer any of those questions. Brent, welcome to the LYBL podcast. After saying all that, we're excited to learn from you today and maybe even challenge you to a few fun questions along the way. How are you doing?
Doing great, Tim. Glad to be here.
Good. Well, one, I want to make sure that when we're talking today, because a lot of people will probably tune in and think that this is just going to be, a podcast talking about the markets. And yes, we want to discuss what's going on in the market, most recently, especially, with some of the volatility that we had over the last week or two. But really, I want to get to know who you are and kind of behind the scenes. So what makes you tick outside of the markets, and what does a perfect day look like for you?
Tim, as an investment professional, I spend my free time, scouring the Wall Street Journal, reading academic white papers about investing. I'm kidding, of course. I have a life outside the markets, and it does revolve around my family. So as you mentioned, got a wife. We just celebrated our 10-year wedding anniversary last week. We've got two perfect kids, 6 and 3. So my perfect day off is spending a lot of time with them. And honestly, we do that pretty frequently. Like, my perfect day usually goes something like this. Wife Emily and I will wake up, or the kids wake up. We'll split a pot of coffee on our screened-in porch. That's our happy zone. We'll make breakfast as a family. Running joke on the team is how much I love oatmeal, so oatmeal's got to be involved. We're pretty voracious readers, so then we'll pivot to maybe getting some reading in, whatever book we're into at the time. And then at that point, if it's nice enough, we love going to the pool. If I'm lucky enough, I'll get out and play 18 holes, come home, play in the backyard with the neighbors, something like that. And then ending the day with Emily and I going to dinner, just the two of us, somewhere local, coming home, putting on our sweats, opening a bottle of wine, and watching some show. Not crazy, not rocket science, but to me, that is a perfect day outside of work.
Well, I love that it's all about family, because that's huge here with the Sullivans and our swag team as well, especially when we're talking about living your best life. It's got to involve family. Now, you said oatmeal. Did the kids like the oatmeal as well, or what do they like to eat?
My 3-year-old likes oatmeal randomly, so she'll join me in that. The 6-year-old has got to be pancakes.
Okay.
Nothing else will do.
Now, you said wine. What kind of wine do you guys like?
So we really like two. We love Pinot Noir from Oregon and Cabernet from Napa. No particular brand. We just stick to those two things. Don't try to get too fancy with it. Um, yeah, it's kind of a new borderline obsession. We're getting into it a little bit, and so far that's what we like.
Nice, nice. I like a good glass of cab myself. So,
Now, did you remember I was at the wine store about a year ago and
mhm.
I texted you a wine that you've got to pick up? Do you remember what the label was?
Yes, we actually picked it up. It was LYBL. Yes.
That's right. Immediately thought of you
Yeah.
guys.
Not only did we pick it up, and then we went out as a team about, I don't know, maybe about 6 months ago and went to the local winery and we made our own wine. So we made a red and a white. Just got done bottling that about, I don't know, maybe about 3 weeks ago. And it's sitting in the office right now. I think we got about 2 more months, 3 more months of it sitting here. And then we can start passing that out to our client family. So we're
Very
looking
good.
forward to actually, we tasted it a couple weeks ago. We're looking forward to the finished product because they said it still had some time to sit.
Nice. Enjoy.
Yeah. Oh, yeah. Now, you and your wife raising two daughters, how has fatherhood shaped your views on not only wealth, but purpose as well?
Good question. And it sounds maybe corny a little bit, but it has made me realize that health is wealth. I could make all the money in the world, but if I don't take care of myself, if I can't carry my kids up for bed, be around to see future grandkids, it's kind of all for naught. And that was something that really hit home personally for me about 3 or 4 years ago. I had a little bit of a health scare where it was bad enough to where I had to have surgery on a lower limb and I wasn't able to put weight on one of my legs for 2 months. So as you can imagine, I'm propped up the whole time. I get to use a scooter, crutches, the little peg leg thing. It wasn't fun. And at the time, our oldest was 2 and my wife was pregnant. And so here I was, not taking care of myself, pretty immobile, wasn't able to help out. And it was such a debilitating feeling where at the time I was thinking I would trade so much of my wealth and so much of my money just to be able to walk again. Now, I knew I would walk again eventually, like this was a short term thing, but it was honestly a great lesson for me and a reminder to take care of yourself. And so, to your point about purpose, to me, and you guys talk about this all the time, freedom is kind of the point of saving and investing to have that freedom of choice in your life. Whether it's my kids' future financial autonomy, the day I can say that work is a choice, there's a lot of freedom associated with that. Honestly, getting to the point, this is something you're great at with your clients, getting them mentally and literally prepared with and about money to where it doesn't stress them out anymore, to me is like the ultimate freedom. But again, none of it matters if you can't take care of yourself. So I am a strong believer that health is very much your wealth and that you should try to extend your longevity as much as possible. Try to outlive your body. Doesn't mean you should, but you should try to. The common denominator, Tim, with everything I'm saying here is just the concept of time. I'm very sensitive to we get one shot at this. Everybody's got an end date. You got to keep that in mind. Don't let it consume you, but realize that, I'm in the investment business. Commodities is an investment. Time is the most important commodity there is, no doubt about it.
I couldn't agree with you more. I think too many people take it for granted, right? We're going to be around forever, and no, that's not the case. And myself losing loved ones at such an early age, whether that be my wife or my dad, other family members, we take it for granted that people are going to be around forever. And when you're talking about your lower limb, that would had to happen probably prior to us first meeting because I think we've probably been
I was
friends for
walking
about
around
three
just
years.
fine. Yep.
Yeah.
No, so this isn't a HIPAA violation because I'm sharing it.
Oh,
So I had gout,
okay.
and for any of your clients that have had it before, and I don't stereotypically fit the profile for that. I was just preconditioned for it, I guess. I'm in relatively good shape, relatively young, don't eat and drink a lot, although we just spent a few minutes talking about wine. It just hit me, and it hit me in my ankle really bad to the point where I couldn't move. Like, again, to any of your clients that have had it know what I'm talking about. The bed sheet hurts when it's on something that's having a gout flare up. And interestingly enough, so I was bummed about that, got through it, did the surgery, took care of myself, better care of myself. At a Triad experience this year, I got to meet Emmett Smith. And something that got me through it years prior to meeting him was the fact that he went through it. He had gout, and this is a world-class athlete. And reading some of the things he said about his struggle with it, just kind of selfishly made me feel better that here's a Hall of Fame Super Bowl champion going through what I'm going through, and he just grit his teeth and got through it. There's a good lesson there. So he and I had a good conversation about it, which is a lot of fun.
That puts it in perspective at that point. And you're right. You don't fit the bill for it. And I know my dad had it. Now my dad was overweight, bad heart condition, diabetes. So that's the person you would assume may have gout, but yourself fit, works out every day. Like you said, eats pretty clean, hardly drinks, and then you have it. So definitely puts life in perspective when you have to go through something like that.
No doubt. Yep.
Now, Kansas City's a fun area. We enjoy going to Kansas City and travel around the city. I've been to a lot of fun different places there, but are there any local Kansas City spots or traditions that you guys have in the area? Any family
So
routines? Yeah.
yeah, in the area. So I live walking distance to what I would consider the best barbecue in Kansas City. It's a place called Q39. For your listeners that ever find themselves in the area, please go check it out. It's a relatively new kid on the block. It's only been around about 10 years or so. Some of these other legacy ones have been around for generations. So it ruffled a few feathers when people were saying that this was the best because they didn't have a track record. It's kind of like an investor saying they're the best and they haven't done it before. Well, they proved themselves. I would walk through rain and snow to get their wings. Um, that to me is the best barbecue in Kansas City, which means it's the best barbecue on the planet. We do barbecue like Detroit does pizza. In my opinion, you guys have the best pizza on the planet.
I agree both with you. I agree on the pizza, but I also agree on Q39 because when we flew there, it was me and I took some of my advisors with us. And at the airport, I was talking to someone about where we should go for some good barbecue, and they said Q39, and that's where we went. And very good place for sure. Barbecue is really good there.
Good.
Well, what's something that your colleagues, the people over at Triad, might be surprised to learn or to know about you that they might not know right now?
Funny because we were just talking about my ailment, but something else I don't really fit the stereotype for is I'm a massive Deadhead. So a fan of the Grateful Dead. If you see me driving around town or with my headphones in, except for now, obviously, there's a 90% chance I'm listening to Dead music. And it's something, when you close your eyes and picture a Deadhead, you picture guy with tie dye and ratty jeans or whatever. But we're everywhere. It's funny, you know, how many people, especially in my generation, have gotten into that music lately. I think John Mayer's had a big impact on that. And it's something I only got into about 6 or 7 years ago. And I fell into the rabbit hole. And I've been obsessed ever since. So yeah, Tim, if you see me in the airport or something, I got my headphones in, I'm jamming.
Okay.
So that's probably something my colleagues be like, really? You're a deadhead? Yeah, certified deadhead.
I did not know that about you for sure. I thought, when especially some of the places that we've been to and some of the concerts that we've been to, both of us, all different types of music. And I think we enjoyed them all, but I did not picture you as a deadhead for sure. What would you now? Some of the concerts that we've been to, was there any one that stands out to you?
The ones that we've been to?
Yeah.
Oh man. Um, I mean, Nico
Yeah.
was fun, of course. Actually, the last concert I went to was a Detroit band, Greta Van Fleet. I know you weren't there at that one, but I almost texted you because they were rocking. But yeah, I would say Nico was my favorite one that we've been to.
Okay. Greta Van Fleet is good, but I think Nico stands out just because puts you in that vibe. We're always been on the beach somewhere usually or somewhere warm, but just puts you in that, that moment of being on the beach, the waves, the sand. It's just a fun person to listen to. I know on our boat during the summer, as we're riding along or taking the kids tubing, that's usually what we're listening to.
That is a guy who is definitely living his best life right there.
Yes, for sure. We got to get him on the podcast. That'd
That'd be fun. Yeah.
be a lot of fun, actually. Now, let's kind of switch. We've started talking about you personally. Let's talk about the career path as well. But you've had an impressive path, and from portfolio leadership to overseeing fund research. What key lessons did you learn along the way?
Good question. Something I am thankful I picked up on early in my career. I had a lot of great bosses, great mentors, people I learned from. Um, the most successful people I've seen in this profession all have one thing in common, and that's incredible humility. It's the old adage, that if you're the smartest person in the room, you're probably in the wrong room. I myself find myself asking way more questions than I give answers to, which is funny considering I'm on a podcast right now answering questions.
Yeah.
But yeah, that humility, I think, really grounds you as somebody making potentially life-altering investment decisions for your clients. Um, at the same time, some of the things I've seen is, you got to be an optimist, but constantly question the worst case scenario, like what could go wrong, understanding that long term you believe markets do go in one direction, not linearly, but they do go in one direction, and that's generally up. Another great piece of advice I got along the way: don't be dogmatic. I do believe that your opinions about life and investing, honestly, and any preconceived notions you've got about markets, you should open yourself up to be challenged by those. And changing your mind is not a bad thing if you've been presented with enough data and rationale to make a change. And then again, back to humility, being humble enough to say, you know what, I not, wasn't necessarily wrong before, but I could be more right doing this. And then acting on that change is a major sign of investment maturity, in my opinion. You also have to understand that no investment, I don't care what it is infallible. No matter how strongly you believe in it, again, something could go wrong and usually does at some point. A couple others, I believe that there's very few purely bad investment positions out there, but there are a lot of bad investment position sizes. This is why me and your team talk about asset allocation constantly. It's okay to make mistakes, just don't make too big of a mistake too frequently, and you're going to be okay. And then the big one is just understand that what we do, you as an advisor, me as an investment professional, is a bit of an art and a science. There's a lot of math involved, obviously, in investing. There's big words, there's complicated processes. But at the end of the day, what I've learned is, spreadsheets don't invest, humans do. And humans have emotions, humans have biases, and you have to understand that to gain their trust. As important it is to be somewhat emotionless when making investment decisions, it's absolutely critical to understand those emotions that are at play with your investor base, which, as you know, there are many, and sometimes they can be very, very strong. So those are the few things I picked up along the way. There's probably a million more we could spend an hour on, but as I think about it, those are some of the greatest hits.
Being humble, no doubt about it, especially when you're dealing with someone's livelihood, someone's retirement, right? Their hard-earned savings. But I think you hit the key too, where you said, one, we have to understand it's not our money, but we also have to keep things like politics out of the way. We have to be humble, and that instant reaction, we have to take a step back and make sure we're making the right decision instead of just leaping into it, always questioning, even though, like you said, we believe it's the right investment. But if we're not questioning it and looking at it from time to time, that's where something bad could happen. Whether it's maybe too large of a percentage in one particular investment or just something, totally different. But there's a lot that goes into it that a lot of people don't really understand. And I think that's where a good advisor brings that value to the table, especially, and we talk about this all the time with our clients and with you guys as well, right? There's a lot more that goes into retirement planning than just investments. I know we're talking about investments to an investment guru like yourself, but there's the tax planning that's huge. There's the income plan. There's the healthcare plan and the estate/legacy plan. And I know you guys are very instrumental too and believe into that holistic tax planning, adding that to the overall investment plan as well, which in turn is going to help save a lot of money in taxes and increase someone's wealth at the back end.
No doubt about it. I know we're going to get into that in a moment. I'm excited to dive into that. But back to the original question, I forgot the best one I ever learned. Boss at the time during the COVID sell-off said, a lot of times most people's problems during times like this is just to keep their mouth shut and go for a walk. Like you can solve a lot of issues if you just keep your opinion to yourself a little bit, take a breather, kind of reframe things, rethink things. And I remember literally the day the market went down 10%, 301, markets closed. I shut my mouth. I went for a long walk. Didn't make any rash decisions, didn't panic, just kind of reset the mentals.
Well, if my wife, Julie, was listening right now, and I'm sure she will be when she listens to this episode, but she would say that's great marriage advice as well.
Too smart.
Well, I want to know kind of why you decided to align yourself with Triad Wealth Partners. What made you feel like they were the right fit for you at this point in your career?
Sure. It's funny. So I've been with Triad Wealth coming up on 3 years now. But when I joined, it didn't even exist yet. I was employee number 3. It was more concept than anything. We had a rough business model. We had an idea on the back of an envelope kind of thing. And so it was exciting getting the opportunity to build something from scratch. I never experienced anything like that. I've always worked for very large institutions. The company I came from, I was there for almost a decade. They've been around for over a century. They had and have a great way of doing things when it comes to investing, but they have a very entrenched way of doing things. It's worked for them. It wasn't necessarily working for me anymore. I also honestly, Tim, wasn't in a position where I got to interact with clients or our advisors as much as I wanted to. It was a very research-based role. Make strong decisions, build out your research process, make sure we're being smart about how we're investing, but we'll handle the client communication. My issue with that was I didn't understand what it was the clients actually needed, and I didn't understand how important financial planning was. Both of those I got, as obviously you've realized, way more exposure to over the years. So honestly, Tim, I think Triad Wealth was just right place, right time. We've so far built a really strong business. We've done some amazing work for our members and their clients in short order. And ultimately, back to my point about planning, I really wanted to partner with and support what I consider true financial planners, not just investment advisors. So over the past couple of years, I've honestly learned a lot from you since we partnered together, learning about holistic planning. You mentioned a few of the key points: income, tax, legacy, health, etc. It's been very eye-opening for me. and it's had a major impact on understanding what clients and financial planners really need when it comes to making sound investment decisions. I used to think trying to outperform the market was all that mattered. And that was a very short sighted view of how you can apply value to end investors. And I'm obviously biased, but I can't imagine many firms are doing it at the degree and level that Triad is. From what I understand and what I've researched, like it truly is industry leading. And I know that all of our members and obviously you and your clients have significantly benefited from that. That planning based approach is what really moves the needle. It's not picking stocks, it's not making the right call, 9 times out of 10, which is nearly impossible. It's making sure you have things set up to where your clients are going to be okay across multiple different fronts: income, health, investments, tax, you name it. That's what really matters. And that's why I chose Triad Wealth, because they believe in that.
I think a lot of people say they do holistic planning. It's probably one of those taboo words, like also saying fiduciary out there. A lot of people say they're a fiduciary, but they're not acting in that capacity. Same thing with the holistic planning. A lot of people will do these educational workshops or dinner seminars or talk with their potential prospects or clients about these 5 different areas, but very few of them, that at least that we see coming into our office, are really following that path. They're still just really managing their investments, and that's something that we appreciate with the partnership that we have with you guys in making sure or ensuring that our clients are taken care of in all those 5 areas. Now, in an effort, or really, let's talk about some of the things going on in the market too. Talking about inflation and uncertainty and rate changes. How do you approach risk? Let's say today, when we're talking about risk for portfolios, risk for a client in general.
Yeah, we approach it really the only way we can. It's through diversification and honestly just understanding when risk and return is asymmetric. And what I mean by that is, we challenge ourselves to find opportunities where for a similar level of risk, you can potentially maximize your return. And then vice versa. If you have an expected target return, how can you get there with the least amount of risk? And inflation is one of the big ones. So on inflation, my view has been, if you are worried about inflation, as most people are, everybody should to some degree, uh, and you've got a decently long runway, it rarely hurts to own just a high quality basket of stocks that pay a dividend. These types of companies, they have a lot of pricing power. They can pass along those higher prices to consumers. They can support their margins. Those dividend payments can increase at a rate above inflation. So that way you get that growth and income dynamic. It's kind of like Tim fighting fire with fire a little bit. You're using a risk asset like stocks to mitigate a risk to your portfolio, that being inflation. Another big one, and this is perpetual, it's always going to be part of the markets, but that's where the reward comes from. It's just the high degree of uncertainty we're currently facing. And this is where Triad Wealth, we take a very multi-asset approach to addressing uncertainty. I mentioned with inflation, stocks are honestly one of the better inflation hedges out there. But when it comes to uncertain markets, especially where we're at now with valuations, all this AI spending, this is where just plain vanilla, traditional fixed income can really pay, unintended, a dividend, especially when they're paying a real yield like they are right now. Um, a lot of people are drawing parallels to the tech bubble in the late 90s, early 2000s to today's market. And there's a lot of similarities when you really look at it. Everybody talks about the stock market crash that resulted from that. Just to give you the math, from 2000 to 2002, the S&P 500 lost 37%. Most people just focus on 2000, but it continued for a couple more years. We had 3 straight years of negative return in the markets. That's very rare. That doesn't happen that often. Um, Not many people talk about the fact that the bond market, using the Bloomberg Aggregate Index as a proxy, it was up 33% when stocks were down 37%. So if you were in a balanced portfolio, you did okay. You lost a little bit, but you didn't lose nearly as much if you were 100% invested in the stock market. So I always remind people of that if you're uncertain about where things are headed, you're a little nervous about things like the equity markets. If you look at a bond and you see the interest rate it's paying, that's a pretty good indicator of what your returns are going to be. They may not be at the level stocks are, but you've got more certainty in what your returns could be. Um, Another big one we hear a lot about now is just rate changes. We've got a pretty flat yield curve currently. You're not really being compensated. What that means is you're not making much more in income from taking a lot of what's called duration risk. Why buy a 30-year bond when a 10-year bond is paying a similar rate? So we keep our exposure pretty light to long-term fixed income. We instead own shorter maturity bonds within our portfolios more than anything. If rates do increase, which would usually correspond with some type of inflation shock, they'll be less impacted, and then we could reinvest in higher yielding securities. So those are some of the things that we pay attention to. I'd say just to kind of like wrap that all up, the first step in controlling for risk is understanding what risk could be most detrimental to your plan and your portfolio. That could be a recession, inflation, you name it. But just keep in mind, in some cases, that's not taking enough risk, is the risk that clients are taking. So holding too much cash, not being cognizant of the opportunity cost of missing out on market-like returns. To me, that's as big of a risk as not taking those risks I just talked about.
Especially over the last 3 years where, last 2 years, S&P up over 20% for the most part. And this year, very strong year, even though the last couple of weeks have been a little volatile. It's hard to, it's not that often that the markets are up that high over a 3-year period. So really now's a good time to kind of reconsider things. And especially if you're nervous about the market, maybe reducing some of that volatility. And I know from what you just said, it's not just about chasing returns. It's about really staying focused on more of that long-term purpose that client has with not only their funds, but the purpose or the lifestyle that they want to live in retirement. That should reflect how they're invested as well. Would you agree?
Oh, 100%. And just to put some more math around it, we've had pretty steady eddy returns since April in the equity markets. And this has been the choppiest week last week since the tariff tantrum back around Liberation Day. And the S&P 500 is down 2%. That to me is not a reason to run for the exits by any means. Things like that happen all the time. You look at market history, over the past 100 years, we usually get about two, in a bad decade, three bear markets every 10 years. The average drawdown in a given year is 14%. We experienced that this year and we came screaming back. So that's why I mentioned, it's perpetual. It's always going to be part of markets. That's why they're so rewarding. We just don't know where things are going to go from here. Forecasting is very difficult, especially in market environments like this. The trick is, having the fortitude and being able to shut your mouth and take that walk if it's going to be in your best interest. And I think it's lazy advice just to say, oh, ride it out. Not many people can ride it out, especially when you're dealing with retirement, especially if we run into a situation where maybe 3 straight years of negative returns is going to materially alter your plan. And that is a big reason why I love working with planners like yourself is you guys think about ways to address that. Like you're a better risk manager than I ever will be because you know more about all these other financial tools that are available outside of my purview, like income planning, like insurance strategies. Um, we talk about the this is why mentality. And it's something I love about working with planners. You know, when you're just an investment only type of advisor, which I used to be, quite frankly, when markets are down, there's not many things that you can point to and say this is working with your clients. Maybe you could point to some individual stocks, point them in this direction, that direction. But when you're a true planner, you get to say this is why about other things that may be positive when markets are in turmoil, or just using things to condition advisors to be a little calmer, a little more present. Uh, this is why we solved for income using this. This is why we diversified. This is why we solved for your legacy planning. This is why, this is why, this is why. The more clients hear something like that, I've literally seen it in meetings. It calms their nerves. And then you can have more constructive conversations around investments of saying, okay, since everything's solved for, you're okay. Maybe it's time to rebalance. Maybe it's time to reposition our portfolio a little bit to capitalize on the fact that stocks are trading at a discount. I mean, Tim, you know it's better than anybody. Markets are funny. It's one of the only areas where when things that you want go on sale, people don't want to buy them anymore.
Yeah.
Well, when markets are down 10, 15, 20, 30% historically, that's usually a pretty good time to buy stocks. And when you take a this is why approach to financial planning and clients have the capital to do things like that, they're not 100% invested in the markets. That's a really great spot to be in from a financial standpoint. So, yeah, that's something we preach a lot. This is why approach. As long as you're doing all that, there's always going to be something to point to that is working for your clients.
Well, and it comes down to purpose. I think, you mentioned that when you were just talking now, and purpose for, we talk about the five worlds or what we call our strategic wealth method, but also purpose behind every investment because, this, we might not get too excited about an investment that's not sexy, right? We always want to be in stocks because that's going to produce the most growth, but we have to understand that we need some safety in our portfolio, especially when the markets are down and we need to draw income. So even when the markets are up, we need to have different investments that produce income. Could be, dividends from stocks or bond interest. It could be from rental properties or REITs. It could be from Social Security or pensions. Also, it could be from an annuity. And then the same thing, when the markets are down, we don't want to draw from maybe some of our riskier assets because the markets are down. We have to have those safer assets that produce the income during those periods of time as well. So really just putting a purpose behind every dollar that we have in our investments. And we always talk about purpose with our clients, but what does purpose mean to you as a CIO?
Honestly, personal opinion, it should have little, if nothing, to do with the number or percentage. I hear people talk a lot about, I want to earn this much, or I want to have this much money. Um, that is being the purpose. It's not serving a purpose. It's real easy to get wrapped around the axle of how you're performing versus some benchmark. I fell victim to that in a prior life. Or are you as an investor hitting some arbitrary milestone, first million, getting to 3 million, whatever it is? Uh, as CIO, my job is really to manage our portfolios to the best of our team's ability, but also provide offerings and educate members like yourself and their clients around what is going to work best for their stated purpose. And in some cases, that's going to require growth. A lot of times it involves consistent income, like you hit on. For investors just entering retirement, it's protection. They may have not heard of things like sequence of return risk. And a lot of times it's just a mix of all these things. I've always viewed investment portfolios as greater than the sum of their parts, but they are just parts. And at the end of the day, they are just funding sources, nothing more. I'm much more interested, personally and professionally, about what those dollars could do or represent. And I mean, let's use a tangible example. Let's look at a stock like Apple. So, the way investors determine the financial performance of Apple, how they're doing as a company, by extension, their stock price that they should purchase it for, it's based on their financial statements. So their balance sheet, cash flow statements, income statement, all that stuff they talk about quarterly on earnings calls. That shows how much money they have, how much money they make, but it has very little to do with the business itself. And it's certainly not Apple's purpose. I mean, their purpose is build the best products in the world, enrich, connect people's lives, all that stuff. Individuals can do things like that as well. They just need the freedom and the capital and the plan to do so. They don't want to, I think at their core, just live off a spreadsheet and be happy with a big number that they see on a statement. They want to do something with that. They want to use their balance sheet, use their income statement to enrich people's lives, build something, be a personal version of Apple. And they can't do that if they're just focused on the math. It's got to be serving some higher purpose, but again, it's got to serve that purpose. It can't be the whole reason they're doing this. Otherwise, it's going to be the tragic, passing away with millions of dollars that were unused fallacy, which I hate hearing those stories. I'm not a hardcore die with zero guy, but I want to see people utilize their wealth. I love spending money and I love seeing people spend money for joy in their life, experiences, fulfillment, you name it, rather than just keeping it in the bank or keeping it with me. So yes, folks, I'm the investment guy that's telling you to use the money I'm managing on your behalf. I love that stuff.
Well, that's two of us because we tell them the same thing, unless their goal is strictly to leave the most amount of money to their kids or their grandkids, which we could do that through life insurance if we need to, and still spend every dollar that they have, right? And they can enjoy life to the fullest. And that's why we call it live your best life. We love seeing our clients being able to really live that life of significance. We try to get out of them, what's important to them and then help them accomplish that. We always call it uncovering opportunities they never knew were possible. And then not only uncovering them, because we can always uncover things, but if we don't take advantage of those opportunities, then they're lost. So let's go ahead and figure a way out to accomplish your dreams. And let's go ahead and fulfill that, put that into fruition. But out of the 5 areas that we really focus on, when it comes to our strategic wealth method, having that income plan, the investment plan, tax plan, healthcare, and legacy, which one do you see most overlooked, I would say, by investors or even investment advisors?
Yeah, this one's easy. It's taxes. That's just within my ecosystem, investments and income planning a little bit. I say it's overlooked, but it's also overlooked. And I'll explain what I mean by that. And honestly, Tim, you and your team do a great job of this, investing on behalf of your clients tax efficiently. I don't believe a lot of advisors do things like tax loss harvesting, being very methodical around asset location, strategic use of, ETFs make more sense in this type of account, mutual funds make more sense here. When do we use individual holdings? There's a lot of tax related decisions you can make as an investor. It can be overdone. Now, I say that it's overlooked because not many people are doing it properly, but there's some people that are kind of kicking it into overdrive and doing a little too much tax planning. What I mean by that is, we have a saying on the team, we don't believe tax efficiencies make bad investments good. They just make good investments better. And you should rarely let that tax tail wag the investment dog. What I mean by that is try to avoid making investment decisions purely for potential tax benefits because it could be a bad investment. Make sure it's an investment that makes sense for you and for your plan first, rather than saying, oh, yes, I'm going to get this huge tax break, but it means I'm going to own a solar wind farm off the coast of Africa or something like that. It's like, well, that could go belly up and you got the tax benefits maybe, but how did your investment do? So there is an order of operations to tax efficient investing. Make sure the investment itself makes sense. And then the potential tax benefits are the cherry on top. So that's one that I've seen, again, overlooked more than any of the other 5 worlds.
Yeah, taxes, I think most people, when they come in, have no tax plan. Probably 8 out of 10, maybe even 9 out of 10, They have no tax plan at all. My advisors never talk to me about that. Matter of fact, when I do talk to them about that, they tell me to call my CPA. And it's not that, we're functioning as a CPA, but as a financial advisor, there's a lot of ways that we could help save our clients money in taxes, which obviously is going to increase their overall nest egg. So we work a lot with their CPAs or our CPAs that we refer our clients to, and just help them understand, how much they could potentially be saving in taxes by doing proper investment planning and tax planning. So I would say that would be probably the biggest area that we see as well as is tax planning. Now, kind of going back to a couple of questions ago too, when we started talking about volatility, and really keeping clients emotionally grounded during market pullbacks. And someone actually had called me last week and said, "Hey, what the heck is going on with the market?" And I had to think for a second, because I'm like, I know it's been a little volatile, but I actually looked at the numbers and I just pulled up like the S&P, because I was real quick running in between appointments. And I'm like, all right, the S&P is down, I think it was like 1.5% that day. And then I looked, all right, well, what has it been down for the week? And it was like 2.5%. And I said, wow, it's probably from just watching TV itself and the different news channels that was really making the market look a lot worse than what it actually was. But how do you keep clients really staying confident and emotionally grounded during periods like that?
Reminds me of the old Jerry Seinfeld joke that it's amazing all the world's news always fits on the same amount of pages in the newspaper. And that's how I feel about legacy financial media a little bit. I mean, there's cable news channels dedicated to investing. And I think they do some good, but they've got 24 hours to fill. And filling that with markets in turmoil headers and the stock's going to crater and honestly scare tactics, because as I think most people have seen, maybe literally, the scarier the headline, the more clicks it's going to get. That's kind of how media and journalism works a little bit. So as you can tell, I've got a bit of a jaded view on that. But it is something that people in our line of work have to grapple with and understand that, clients may see something. It doesn't mean their fears are unfounded by any means. Like, they're real. It may have been one data point that triggered them. And so honestly, it's one of the hardest parts of the job. Uh, but the first thing I usually do is just listen. Start with empathy. A lot of times, again, clients just want to know they're going to be okay if the stock market is down 2.5% in a week. And a lot of it goes back to the "this is why" thing. That's where you can pivot once you listen, understand what people are going through, where that fear is coming from, remind them why they work with you, why they do holistic planning. We're ready for moments like this. In fact, we're ready for way worse moments than this, and you're going to be okay. Once you get through that as a client, you feel in a good spot, then you're more open to hearing the data. I never start with data of being like, "Oh, we're only down 2.5%. That happens 7 times a year." Like, clients don't want to hear that. That's not reaffirming. That's like telling a flat earther, no offense to any of your listeners if they're flat earthers, but the more data you throw in their face saying the earth is not flat, the more they believe it's flat. The more data you throw at somebody who believes markets are in turmoil, they're still going to believe markets are in turmoil unless you start with that empathetic tone. But then at that point, data takes over. And it's a lot of the points I mentioned earlier. 2 to 3 bear markets a decade, 14% correction every single year. What that does is it helps normalize the situation. Charts also really help with this. If you're familiar with that measles chart, which is a gross name, but a great chart, it shows every single year market returns. A lot of times those bars are positive. And then these little red dots way down in the negative. Well, that's where stocks were at some point during the year, but they finished up here. People are visual learners. So data and charts can do a lot in terms of, helping address client concerns and make them feel better about staying invested. And again, back to the "this is why" rebalancing idea. Whatever it is, tumultuous times like this, like Liberation Day, like 2022, usually a great time to invest in risk assets. So clients hear all these things in that order because the order is the key. a lot of times they do go from wanting to pull money out and being nervous about their financial situation to instead rebalancing into risk assets because now they see the value. So that's what it is. It's making sure you've got those three main pieces and you think about them in order. Usually that fosters good investor behavior.
You have to start with the first one, though, because you are absolutely right. If you jump in with just the numbers or this is what is happening right now, they don't want to hear that. They want to be reassured first and foremost that you have their plan taken care of because everyone's concerns are going to be different, like you said. And that's all starts with understanding your client, understanding the person that you're working with, what makes them tick and what they're looking to get out of their portfolio and why, right? So yes, making sure you're reassuring them that they're okay because they actually have a plan in place. That's going to help probably 85%, calming their concerns down. And everything else, like you said, becomes the facts of what's going on. And then they're going to be able to stomach that and understand that you have them taken care of.
Well said. That's it.
Well, we could do a lightning round. And I'm going to ask you a couple of, or mention a couple different words. Tell me which one really applies to you or which one you would prefer. So real quick here, just a couple of these, but you prefer coffee or bourbon?
Oh, coffee for sure.
Stocks or real estate?
Stocks.
All right, basketball fan or football fan?
Yes.
Both. Okay.
Football.
All right, football. Now, favorite vacation spots with your girls?
Seaside, Florida.
Seaside, Florida. Where's that?
It's kind of by the Panhandle, so
Okay.
it's in that 30A area.
Yeah.
Yeah. Beautiful.
I have not been there
this summer.
All right, I'm going to have to check it out because we love Florida. So, how about first concert you ever attended?
This is funny. When I was 7, I saw the Osmonds in Branson, Missouri.
Wow.
That was my first concert.
I still have to get to Branson, but the Osmonds, that's interesting. I wouldn't have expected that either. So Grateful Dead and then seeing the Osmonds, would not have guessed that.
I'm an old soul, Tim.
How about one financial book every investor should read?
On my shelf back there, but Psychology of Money by Morgan Housel. It's one of the few investing books I've read more than once.
That's a good book. I've read that myself. I agree. How about most underrated metric when reviewing a fund?
Okay, I'm going to nerd out for 1 second.
Yeah.
Information ratio. That is the excess return of a fund relative to its tracking error, which in English means how consistently good is that fund or that manager at picking better stocks than the benchmark. That's all it is.
Okay.
It's rarely published, but it's one of the most important ones.
Which is very important, I would imagine. And I'm sure our clients would love to know that as well, especially when they're investing or using portfolios by that manager. So I think that's awesome. And then how about an investor you'd love to have lunch with?
Oh, I'm going to say Ed Thorpe. So Ed Thorpe he's known as the Forrest Gump of finance. He's got this knack for being involved in very pivotal moments in our industry. He's a Renaissance man. He's the guy who wrote Beat the Dealer. If any of your clients are gamblers and like blackjack, he essentially invented card counting. He was an early investor in Berkshire Hathaway and Citadel. When I say early, he was like one of the first investors in Berkshire Hathaway. Really successful hedge fund manager. My favorite thing about Ed, two things. One, he's early 90s. He looks like he's 60. So he's got great longevity advice. He also is on record calling out Bernie Madoff as a fraud in 1991. 17 years before it created, he was saying, this thing doesn't make sense. He's just one of the sharpest investing minds I've ever dove into. He's probably the most important person in finance not many people have heard of. He's astounding. I would love to have lunch with that Thorpe.
Did he pull the "I told you so" card afterwards for Madoff?
No, because he's too humble.
Okay. And interesting. If people would have just listened to him back then. I haven't heard of him, so I'm gonna have to actually look him up and until you just mentioned him. So I'm gonna have to look him up and read about him, get to know him a little bit better.
Yeah.
Well, I want to talk a little bit about purpose, legacy, and reflection a little bit here. But before we get off, but what's one common mistake you see people make when building wealth?
We covered it earlier, but just not having a purpose for it.
Yeah.
If clients can't answer the question of, what are you going to do with this money?
Yeah.
Or even worse, what do you want to do with this money? It's kind of like exercise. Studies have shown that people who have some goal or some target in mind enjoy working out more and they do a better job when they're working out than somebody who's just exercising for the heck of it. It just feels like work. It's directionless in how they're doing it. Having a stated goal and holding yourself accountable to that works in exercise as much as it works in investing. But you got to have that target in mind, and it can't be a number.
I think if anyone walks into the gym today, just looks around, you'll see that purpose, or that person rather, just mindlessly wandering around from machine to machine, having no idea what they're doing, why they're doing it, or even really why they're actually in.
The best are carrying something like this and have planned out what they're going to do that day.
Yeah.
Yeah, those are the people with the financial plan.
Agree. Now, if you could change one thing about how people view money, what do you think that would be?
Not a competition. I think a lot of people think it is. Try as hard as you can to not care as much about how much your neighbor has, what car they're driving, what renovation they're doing, how early your cousin-in-law bought Bitcoin, how good generations before or after you have it when it comes to finances. Um, Focus on how much you yourself need and want. And I think you're well ahead to having something that those people I just mentioned don't have, most likely, which is just inner peace and being content about their financial situation. You've heard them all. Like,
Yeah.
don't keep up with the Joneses, don't move the goalposts. Just focus on what you yourself need, what's going to make you happy, and stick to that and tune out the noise.
I don't think a lot of people do know what they want. When they come in here, besides like, hey, I want to maintain my lifestyle, I want to golf, or I want to take a vacation, I don't think advisors do a great job. And I don't necessarily consider ourselves as advisors. I think we're more leaders. We're here to love our clients, support them, encourage them, and challenge them really to see a life of significance. And a lot of people just have those general answers when you ask them what they want out of life. But by getting to know them more on a personal level, and really, I'm talking about a deep dive, then we could challenge them after we know what they want. And then we could show them that this life or this retirement is possible. It doesn't matter if you have millions of dollars or hundreds of thousands of dollars. The person who has 10 million might not be able to retire today because of their lifestyle, right? Where someone who has a couple 100,000 can retire today and live very comfortably because both have very good social securities, both have very good pensions. So they don't need a lot of income and they could still, do the things that they want to do in retirement. So really getting to know them on a better level, that's where you could figure out if they have enough to retire. So I like that. I like how you said that. But now, talking about like serving our clients, serving other investment advisors like you do yourself, what legacy are you personally building for your family and your community as well?
I love that. I've thought about this a lot. And what I want to build for myself and the Rugrats I hear in the hallway is what I call a triangular, or dare I say, triad legacy with my wife and children. So, triad triangle, there's 3 points. I want to make sure that we're building a legacy of being financially secure. I want to make good money, want to invest well, I want to compound my wealth. I also want to work hard. Like, I want to be a good role model for them, their peers, my colleagues. I want to be known as somebody who didn't take the easy route. And I want to manifest that in my kids and them to see that and work hard because of it. And then I also want to, we kind of hit it off with this at the beginning of the podcast, spend as much time with them, quality time with them as possible. It's sad to think about, but you get 18 summers and that's it. And I want to maximize those. And the reason I call it triangular is all three of those are feeding off each other. Dad works hard so we can have money, so we can go to Disneyland because dad's very busy providing for our family, so mom can stay home. It just all kind of like is very harmonious. But those three key elements, I heard a while back, Tim, that one of the ultimate proxies for realizing that you've been a good parent is your kids want to spend the holidays and vacations with you later in life when they're in their 20s, 30s, 40s. And that's my goal. Not necessarily that my kids need to spend time with me, because right now legally they do, but they actually want to. Like that's all I care about. I believe that following that framework and having that balance is going to maximize my chance of realizing that. Like, that is my purpose. Like, that is the definition of me living my best life, is looking forward and looking back on that, realizing I did everything in my power, financially, work ethic, emotionally, being there for them to where they want to go on vacation with me when I'm in my 70s. That's it.
You said it best, and that's what I was going to ask you was, what does living your best life mean to you? And I could tell it's about family, it's about purpose, it's about leading by example to your kids. And what a better testament than, or no other better testament than them in their 20s. And we're starting to see this with our kids, our daughter and our son in their early to mid 20s. And coming back, except for this Thanksgiving. Our daughter's actually going to the Lions game. So she told me she won't be there this Thursday, but her and her boyfriend will be there on Friday to spend some time with us.
And yeah, I mean, I know how you vacation. Anytime you want me to tag along, just let me know, because I know you and Julie do it right.
Well, Brent, we appreciate you. Thank you for being here today and sharing your wisdom. Not just about investing, but about, leadership, legacy, and family. If people want to learn more about you or Triad Wealth Partners, where should they go?
Yeah, no, appreciate that, Tim. Really, two main places. Our LinkedIn page, Triad Wealth Partners, is the name of our company. You'll be able to see updates from us. I know I threw some shade at financial media, but I do a fair amount of it, industry publications, things like that. If you ever want to read our weekly market update, we can get you that. And then triadwealthpartners.com is how you can learn more about our business, myself, our team. So yeah, those would be the two places that your listeners could find us.
Thanks for tuning in. If this episode sparked something in you or made you realize it's time to stop guessing and start planning, we'd love to meet with you. No matter where you are, no matter when you start, you deserve to live your best life. We'd love for you to like, subscribe, and share this podcast with your friends and your family. Remember, living your best life isn't a destination, it's a decision. And it's a decision that you get to choose. Until next time, stay well, stay informed, and keep living boldly.
Investment advisory services are offered through Strategic Wealth Advisors Group Incorporated, a Securities and Exchange Commission registered investment advisor.